All right, so we had another very interesting week in the markets. The biggest news, Bitcoin went above 100,000 US for the first time. And this is really, really big news. I don't think it's being talked about enough. And the reason for that is I think we're still in the early stages of this bull market. Maybe you could say the mid stages, but I still think we're in the early stages. And there's many reasons for that. The first one is you have the first time in history to where we have an openly pro Bitcoin or crypto, depending on how you want to put it, president and SEC and basically every federal regulatory commission. But also have to keep in mind that's just the US. I mean, the vast majority of the world's population does not live in the US. However, they are the most, I mean, of all the Bitcoin owners, I would venture to guess that the most are in the US. I don't know about China, but most likely the US. So that's really big news. And again, I've said time and time again, I know that there's a lot of people out there that still don't get it, and most of them probably will never get it. This is one of the areas where I disagree with a lot of the Bitcoiners, is that a lot of people say, yeah, eventually everybody's going to have Bitcoin. I don't believe that. I think that there's a lot of people that will never admit they're wrong. It doesn't matter how obvious it is. They're just not going to admit they're wrong. That's a different story. I've been over that a million times. But Bitcoin going over 100,000, this is really big news because this was probably the biggest mental or psychological hurdle for it. And something that isn't also being talked about that much is that I believe it was in literally like the mid 90s or even early 90s. Low 90s. So it went up I think as high as about 103,000. So it went up like $8,000 or $9,000 in a matter of 24 hours. So I don't think people realize, like, again, we could go from 100 to 110, 120, 130. Like that could happen in a week. Like I don't think people realize just how quick things can change. And I think that is going to change. I think the trend is rather clear. A lot of people say, "What's your prediction for this cycle?" And it's very hard to tell. Like making short-term predictions, frankly, I don't really care that much. What I care about is I think it's blatantly obvious that Bitcoin's going to trend up against every other asset, if not virtually every other asset in existence, from now until maybe the end of time. But at the very least, the next generation or two, until theoretically maybe something better can come out. But that's basically what I'm saying there. MicroStrategy has acquired 15,400 Bitcoin for $1.5 billion at 95,976, a yield of 38.7% and 63 year to date. So again, MicroStrategy officially holds 402,100 Bitcoin, and the average price is 58,000. And the main reason I wanted to bring this up, frankly, is I listened to the interview with Patrick Bet-David on his podcast recently, and this was probably 2-3 weeks ago that it came out. I don't remember, but something that Michael Saylor brought up on there is something that really blew my mind and definitely changed my mind, not changed my mind, but just made me a little more confident in this situation. In that I don't remember the exact situation, but the long story short, the long and short of it is, someone asked him something along the lines of, how close were you guys to getting margin called the last bear market? And Michael Saylor was like, he was kind of shocked. And the reason that he was shocked is because they weren't even close. And in that, what people don't realize is that the price of Bitcoin is not what determines whether or not their loans or anything go belly up. Their bonds that they're selling are convertible, meaning number one, they have zero interest, and number two, they're based on the price of the stock. They're not based on what loans typically are based on. So frankly, I'm going to be pretty straight up here. I'm fairly aggressively buying MicroStrategy, and I'm buying another ETF that is related to MicroStrategy that I might get into in the future. And I think that this is one of the biggest I think this is one of the biggest investments that if you want to compound your money really quickly, I think that this is a good opportunity. It is obviously extremely risky, so you got to be careful there. But I think that this is just an absolutely golden opportunity, like an just absolutely amazing opportunity. And the reason for that is I think that it's rather obvious the price of Bitcoin is going to trend up, especially over the next year or two. And given that, it's a virtual certainty that MicroStrategy will outperform that. So typically, I think it's better to have more just straight cold storage Bitcoin. That's always the best piece of advice. But at the end of the day, you do have, a certain amount of money that you can put into stocks or ETFs that is tax free that you cannot do with cold storage Bitcoin. And until you can do that, and even if you could do that, there would be questions as to whether or not that's a good idea. Until you can do that, I think that the best way to get exposure to Bitcoin is not the ETFs, it's not the miners, it's MicroStrategy, because they have this strategy that has so much upside, and the downside, it has downside, but it's not as much as what people think. And my whole point with bringing up the Patrick Bet David thing was the downside to what they're doing isn't as bad as what people think. Right, a lot of people think that if Bitcoin goes down enough, they're gonna get margin called, and the entire company is gonna go belly up. That will happen at some point, but it's gonna have to get a heck of a lot worse than what people think. And the reason we know that is that Michael Saylor said, or at the very least, he clearly implied that the last bear market they weren't even close to having an issue. Like the last bear market, they weren't even close, and we went from 69,000 to like 17, 18,000, whatever it was, and they still weren't even close. We would literally need like a 90%, 95% drawdown in Bitcoin for them to go belly up. On the flip side, what's more likely? Bitcoin continues to outperform the market, or we get a 90% drawdown, a 95% drawdown? But it is way, way more likely that we continue to outperform the market. We might get diminishing returns, but it's a heck of a lot more likely that we outperform the market. And on top of that, it comes with a quasi-leverage, right? Because they are doing something that nobody else is doing, or at the very least nobody else is doing on the same level as they are. So that's something that I think that I think it really needs to be keep an eye on. As far as the market goes this week, it was kind of an interesting week. The growth side of the market is what outperformed, which was kind of a reversal of the recent trend to where your small caps and your mid caps were what was outperforming. The equal weight S&P was actually down on the week. Meanwhile, the market cap weighted S&P was up over 1%. The NASDAQ was up quite a bit more than that. The Mag 7 hit a new all-time high. The NASDAQ hit an all-time high. The S&P hit an all-time high. So we had a little bit of a reversal there. However, I don't think that trend necessarily will continue over the long run, because if you look at these growth names, the growth names are the names that are the most overvalued, right? At least compared to their historical averages. So that doesn't necessarily mean that you should sell necessarily. Nobody knows what's going to happen. I think that, as far as my personal strategy goes, I have zero cash right now. And in my mock account, I do have probably 5 to 10% cash. But in my personal account, I have zero cash. And I'm going to start building some. And by that, I mean I'm going to buy just a short-term bond ETF, and the reason for that is I think the market's overvalued, and I'm also taking a lot of risk. And given that,
so I'm taking a lot of risk in that scenario, but the reason for the cash is simply just to provide a little bit of a de-risking event, for lack of a better way of putting it. And I expect a pullback in stocks at some point this year, not this year, but 2025 or over the next calendar year. So that would be the reason that I'm adding that. And basically, I would probably every 5% pullback, maybe put in 20 to 25% of that cash into stocks. I don't know. That's just kind of a rough thing. And frankly, if you look at the data most likely shows that the best way of doing it, if you're a long-term investor, is simply just to keep buying stocks and to not worry about the cash. But the problem with that is that from a psychological perspective, does it really make sense? If it makes you more comfortable to have a little bit of cash, that's kind of my way of thinking about it. And like I mentioned, I am my pretty much my by far my biggest position is a very risky position, and I'm confident that it's going to work out. That's why it's such a large position. But if it doesn't work out, then you're kind of screwed, uh, and that is why I am going to do that. So, what do I think is going to happen in the short term? In the short term, I'm still bullish because uh, we don't really have any major catalyst that is like a cause to be bearish, right? We really don't. I mean, the economy's not great, but it's not necessarily bad either. And I think that with a changing administration, whether you like them or not, I think that's kind of irrelevant. I think that there's clearly some optimism there, and I think that even the people that are pessimistic, it's still going to force them to step up their game, right? So I think that the new administration, I think that definitely helps a little bit. But on the flip side, it's also they have to be careful, right? You have to be really careful because nobody can really predict a lot of these things. And when you look at a lot of the problems out there, like a lot of things are papered over. So um, part of the reason that the economy is still doing all right is because the government props things up to such a large degree. So that's something to keep an eye on. But like I've said time and time again, uh, we are at least six, like maybe not six, but at least 2 quarters away from a recession. So I would say that I think that we probably, my prediction would be as far as next year goes, I'm going to probably think about this a little more and make a full video on it. But my full prediction would be that I think that we start the year strong, and we have probably a more extended pullback in the spring or the summer, and then we finish the year up a little bit. That's my prediction. My prediction for next year, at least where we stand right now, is a modest up year. That's just what I think. And the reason I say that is that given how well stocks have done this year, I find it hard to believe that we have another extremely bullish year. But there's also the data also doesn't point towards the idea that we have a massive or even like a moderate crash. So I find it kind of hard for stocks to be down. So that's why I would say like a modest up year. I would expect maybe 5-10%, if I'm just guessing. But again, nobody knows. We could have some unforeseen event. We could have wars could escalate, or maybe the wars de-escalate and things turn around, and the economy does really good, and we have another really big up year. Like, really, at the end of the day, nobody knows. But that's just what I'm thinking, right? That's just what I'm thinking. So, long story short, I think that there's two big pieces of news coming out from this week. Number one, Bitcoin. I think Bitcoin is the most obvious bull market in history right now. And number two, stocks at another all-time high. But on the flip side, I think that now is as good of a time ever to be cautious when it comes to stocks. Uh, I'm still a net buyer, right? I'm still a net buyer of stocks, but I'm not doing it at as large of a scale as I normally do. That's just my opinion.